Hi, this is Brent with Trade Therapy, recording another chart breakdown video supporting our Clarity Spotlight on Amazon last week. Today is Wednesday, April 23rd. It's just after market close. It's about 1:45, I think, Pacific time. We did revisit Amazon for the first time since October. This is where we left off with Amazon in October. This is from October 12th. You can see this cup and handle formation, this cup and handle pattern that had formed following this impulsive wave breakout from the post-COVID inflationary interest rate market. You see the markdown in a selling climax or Wyckoff spring right here, and then this big impulsive structure right here. And we've talked about at length the reaccumulation process happening across the mega cap tech space, across the Mag 7, related to all of the unrecognized gains from this run right here. So this was an obvious place to look for reaccumulation at the top of this cut base. We did point out this big volume shelf right here in the volume profile and the potential for it to act as support to push price up over the rim of this cut base. And that was really our primary expectation coming out of October. And we did get, just jumped over to our update from last week. We did get that push up above the volume, the cup of the, I'm sorry, the rim of the cup base here. We did see the volume shelf work as support and push up out of this cup and handle pattern. But what we also see is this obviously this very sharp decline in this late stage reaccumulation shakeout here that we've seen across all of the mega cap tech space and across the Mag 7. So this is the culmination of this reaccumulation process here. This would be the last of the long position that they closed before they switched over to the short side right here. We do see this cascading ABC structure down to the 200-week exponential moving average here, testing this previous low right here and probably dipping down below this volume shelf profile once again. We have been commenting consistently as we've been going through this and heading into late stage reaccumulation that we will keep a very close eye on volume. Volume will tell us when it's time to buy. And you see this back test of this low and this back test of the 200 weekly exponential moving average being greeted by a very large volume spike right here. So this is a low volume sell-off here that did find buyers. It's a low volume test, which is what late stage accumulation and reaccumulation tactics are. They will continue to provide supply until buyers step in and long positions begin to change the dynamic from supply greater than demand to demand greater than supply. And that's what we see. I jump over to the daily chart that we shared last week. This is from April 18th. And you can see this low volume continuation of this sell-off here. It's well below average here until buyers step in, and then we see demand really come in strong here to defend this previous low, which was also taken on high volume here. So more than likely the same institutional money that bought right here also bought right here to protect this low. This white dotted line right here is the point of control from our volume shelf, and you can see that it indeed did get undercut. We did see this 1, 2, 3 pattern right here, back testing and taking out inefficiencies from this big, heavy volume push off of the low here. So our real primary expectation heading into next week, what we were really looking for would be follow through to the upside. So if I come over to a live chart here, this is from today. This is after hours today. We see that we did get that follow through. We did get a push higher, now getting up into the falling moving averages. This is a daily chart. I switch over to a weekly chart, uh, we can see a really what appears to be a bottoming structure here where we've got a selling climax, then a back test, and then volume coming in. So it's only Wednesday. We're not quite up to average volume yet, but it looks like we will get there. Still seeing some top wicks forming on top of the candle, on top of the candles. We'll see if that holds through the end of the week. I turn on all of our detailed analysis here. We see I mean, just a beautiful example of the institutional business cycle with distribution heading into a markdown process. These upthrust after distribution and last point of support right here, supply right here, um, is the last portion of this long position, and all of these gains that were taken, they get closed out right there. Institutions go short, and we see a markdown process, redistribution down into this accumulation structure that comes out into a new markup campaign that is marked by signs of strength and back tests. This is the hallmark of an uptrend and the hallmark of a markup campaign. This is what it looks like. Moving forward, we do think we'll see what happens going into earnings, but this does appear to be a very mature reaccumulation structure right here. We do see the volume support that we're looking for. We do see some pretty significant bullish divergence built up here. There's a Fibonacci cluster from this Fibonacci retracement from a high to a low here, extending up to a 1618, and then the post-COVID Fibonacci extension here. So one would be our high up here, and then 0 is our low. That extends up to this 315 area right here. So this would be our next level that we'll be looking for any sort of a significant pullback. We think in that more than likely will be flat because we've seen so many really sharp pullbacks up to this point. We could see a rally heading up into this area here, and then more of a flatter consolidation period at the 1618s, where the next round of profits will most likely take or be taken. And just because of these sharp pullbacks here, we may be due for a flat profit-taking process playing out at this fib cluster right here. So overall, very bullish look for Amazon. Our expectations are that we're going to see support continue to be provided here. We're going to see demand greater than supply conditions come in. We'll see price work its way up through the shorter term Fibonacci levels, and then continue the markup process into this fib cluster in the 311, 315 range. So I hope that's helpful. Hope that provides a little detail into what we were seeing in the charts. Hope everybody got a lot out of last week's Clarity Spotlight, and hope everybody's had a good week so far trading.